HTJ.tax, the international tax firm for 6, 7, and 8-figure investors and entrepreneurs who are living that international life. Are you ready?
If a U.S. citizen renounces their residency, a U.S. citizen renounces your U.S. residency. So I guess you renounce, is there 10? Okay. So as a U.S. citizen, you cannot renounce your U.S. residency, even if you're not resident. So before I get to the rest of your question, I just want to stop then as a point, right? Even if you're not resident in the U.S., if you move from Louisiana to London, the IRS does not care that you no longer live in Louisiana. If you move from Miami to Malanda, the IRS does not care that you're no longer living in Miami. You're going to be taxed on your worldwide income regardless. The only way around that is if you move to Puerto Rico or if you give up your U.S. passport. So once you give up your U.S. passport, that renunciation of your citizenship, then you would only be taxed on your U.S. source income. So if you like have rental property or U.S. investments, that may be subject to U.S. taxes. But whatever you do outside of the U.S. after that renunciation is normally out of the reach of the IRS. So that's how it works, right? So I'm going to the rest of your question now. So is there taxable transaction if there are property owners? Is there taxable? So, okay, I'm not too sure what you mean, but here's how I see it. So in the process of renouncing, there is something called an exit tax. The exit tax will be triggered if you're what we call a covered expat. So when you become a covered expat in 3 ways, the 2 most popular ways would be if your liability, your average tax liability over the past 5 years is over a certain threshold. So let's say it's more than 172,000 per year on average, or if your net assets are in excess of 2 million. So then you may be a covered expat and you would be subject to an exit tax. If you want, we can go into how that's calculated, but you will be subject to an exit tax. Assuming that you are not a covered expat, then once you renounce and you walk away, you're subject to your U.S. source income. So if it is that you do have rental properties, the rental income will be taxable. If it is that you sell your home or sell a home, then that transaction will be taxable as well, capital gains tax. So in terms of U.S. real estate, basically you will still be subject to tax on whatever income or that arises from U.S. real estate. There are exceptions, as there always is, right? I think we recently been speaking to clients about the portfolio interest exemption. So there are exceptions, there are workarounds, but they're not easy. They're pretty relatively complex. But generally speaking, yes, your U.S. real estate will still be subject to U.S. taxes even when you renounce.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.